The housing market is still going strong, with demand for homes higher than we've seen since the housing bubble collapsed 15 years ago. While there are many factors that serve to motivate people right now to buy homes, none are as great as the low mortgage interest rates that have kept home affordability near record levels. Today, we'll dive into current mortgage interest rates and then look to see why they are having such a strong force in the housing market. I've included a list of homes currently for sale in Tallahassee, and you'll see that more than half of them are already under contract, with buyers who are very active due to low mortgage interest rates. Hi, I'm Joe Manausa, author of The Business of Getting Business and the creator of Manausa.com, where I've helped tens of thousands of people buy and sell homes. I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions. And we also provide virtual tours of some of the most beautiful homes in Tallahassee. Please remember to like this video, then hit subscribe and click the bell so that you're the most informed buyer or seller in your next real estate transaction. Most people know that today's mortgage interest rates are low, but sometimes it takes a picture to really understand how low they are in context to what is normal. Take a look at this graph. It shows more than 50 years of the average 30-year fixed mortgage interest rate. The blue area plots the monthly average conventional conforming 30-year fixed interest rate. Mortgage interest rates have been spectacular for buyers for the past 2 years, with rates often well below 3%. The yellow line in the graph is the 50-year average rate, and it's close to 8%. So today's rate of 3% is less than 40% of the norm. Think about that one for a second, and that is why this is such a great picture. Rates are less than 1/2 of the normal rate we've seen over the past 50 years. So today's rates aren't low, they're incredibly low, and this will not last forever. The blue dashed line in the graph shows that rates have been generally falling for the past 40 years, and history shows interest rates are cyclical. This cyclical nature suggests we're about to face a very long-term trend of rising mortgage interest rates, and today's rate might just be the lowest you'll ever see for the rest of your life. This graph has been created for rates from just the past year, and we find that today's rate is almost exactly the same as it was 1 year ago. We've seen rates shoot up, but then they came right back down. The black location markers in the graph show that the Freddie Mac's reported recent rate of 2.98% is very close to the 1 year ago rate of 2.91%. While rates did rise a little from February to May, the recent declines have added major fuel to the fire that is today's real estate market. A recent study by the National Association of Realtors found that 87% of recent buyers borrowed money for their home purchases. So the current mortgage interest rate is hugely important for today's buyers. The bank's rate will determine how much a buyer can borrow based upon multiple factors, but it is the mortgage interest rate that buyers have no control over. The lower the rate, the more they can borrow without getting a higher monthly mortgage payment. So how do we draw a picture of the future of home affordability? I've tried to do it with this graph. It plots the likely future of average home prices as well as future rising mortgage interest rates to reveal an average monthly mortgage payment movement in coming years. And it's not pretty. In order to create this graph, I took today's average price and then had it move 10% higher in each of the next 2 years, followed by 5% higher in each of the next 3 years, followed by an annual growth rate of just 3.6% thereafter. You can see the average home price plotted in red. I've created 2 options for mortgage interest rates. In both cases, I used 2.8% for today through the end of 2022, and then increased it slowly to 9% by 2031. The dashed blue line was created by stopping the growth of mortgage interest rates once they hit 3.5% in 2024. So if you think rates will stay low forever, then follow the dashed blue line to see how the average monthly mortgage payment will change over the next 20 years. If you believe in the cyclical nature of interest rates, then follow the solid blue line. I want you to know that I believe both my price changes and interest rate changes are incredibly conservative, so this graph is likely far more optimistic than we should expect. If you think I'm crazy on either one or both, make sure you tell me why in the comment section below. If you follow the solid blue line, it shows you why I'm so concerned about the future affordability of housing. Soaring monthly mortgage payments will make it very difficult to buy a home. Unless we see significant growth in wages, we'll see a market that slows down on acquisitions and sees significant growth in the rental market. We're going to be facing remarkably different times in the real estate market over the next 20 years, so I encourage you to take stock today so that you can make some long-term decisions while rates and prices are working in your favor. My first advice for people who are thinking about buying a home is to watch my recent video about why the U.S. home ownership rate will crash. I've included a link to the video below. The home ownership video provides a lot of information and guidance about what is happening in the housing market and why the near future of home affordability is going to tumble. Unlike the generations of homeowners before us who enjoyed declining mortgage interest rates each time they purchased a new home, today's homebuyer is going to purchase a home at the lowest rate that they will ever enjoy. Future moves will be difficult as home prices and mortgage interest rates will both be higher. The move-up home that you'll want 7 years from now will likely be out of your reach unless your financial condition changes significantly. Take advantage of today's low mortgage interest rates and secure a home that will make you happy for many years to come. If you would like to see more videos about current housing market conditions, I've assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of my top tips for home buyers, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.